NASDAQ is up 72. S&P is up 12.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, the way you get his newsletter, folks, just come over to our website at TFNN. You're going to see it right in the left-hand corner under Featured Content. You hit Mastering Probability. You just hit subscribe. And when you can get Mastering Probabilities for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. You can get it for a year for $1195, which is a savings of $593 or 33%. They all come, folks, with a 30-day money-back guarantee. Everything to gain, 0 to lose. Steve Rhodes, what's going on?
Weekend from many different perspectives. I thought for me, what I enjoyed the most about the weekend, well, other than a couple of birdies that I had while playing golf, was the space. I don't know what we call it.
Yeah.
The Dragon, right?
Yep.
And
SpaceX, the Dragon mission.
Yeah,
yep, no doubt.
Yeah. And so what was fascinating about, and how I'll tie it into what you and I are going to talk about, is after they got up into orbit, I was listening to some of the dialogue, and they were talking about the importance of being able to keep the space ship in the proper orbits out there. Now,
yes.
The reason why that's important for me, Tom, is back in the 1960s, a guy by the name of Peter Harlan, he was running the he was running the facility that kept all of these satellites in their specific orbits. He worked out of the Jet Propulsion Laboratory, JPL, out there. And so during the day, he was one of the first guys that had one of the big computers to do that. And so during the day, he was using this math that he used to keep each of the satellites in specific orbit. Then what he did was, in the evening time, he kind of moonlighted. He used the same computer, but he applied it to stock charts out there. One of the tools that I use actually comes from Peter Harlan and the math that he created. And it's this little green and red line. Let me just put the chart up here. It's a 30-minute time frame chart now that you and I are looking at for the NQ. And it's this squiggly red and green line. And I'm using the exact same tools, the exact same math that he did, but applying it to this stock chart. And I do this for each of the different time frames. I refer to it during the radio show as Stevie's red line or green line out there. The reason why it changes from red to green, Tom, is what it does is it tells me whether the price oscillator, and that happens to be the difference between what I use as a 39 and 19-day exponential moving average. It tells me whether the price oscillator, which is not shown on this chart, is above 0 or below 0.
Okay.
And if it's green, it tells me that it's above 0. And so a bullish market would have, so when price is above this little green line here, what it tells us that we have a rising price oscillator above 0, and that's bullish. The other really cool part about this, Tom, was years ago I was trying to figure out when is a retracement just a retracement back to support, not to where it had broken out from, but just back to support. It was just a normal jostling of moving up or down. Or in a bear market, when was it just a counter trend rally up into resistance? And that's what this green and red line allows me to do. So it typically is the first place of support or resistance in the move. So let's take a look at when I was doing the show today, what I was sharing with folks out there is let's watch the 30-minute time frame chart for the NQ. And the reason was because it was creating really two different patterns, one of two different patterns. One, I refer to it's the TD9 count pattern. And on bars 8, 9, or the bar following 9 is when we can see a high or low inside the marketplace. So if we just take a look at those 9 counts, on my chart here, we'll see that if we come back to about 2 o'clock in the afternoon, the NQ topped with bar 8 of that TD9 count.
Yes.
When the NQ formed a bottom, this is at 1 o'clock in the afternoon on May 29th, it was the bar following bar 9. That was the most recent bottom. Well, now we came into the 2 o'clock time frame today. We got bar number 8 again. Now, when price pushed lower, since then, it found support at Stevie's green line. We can see how right here at 2:30, 3 o'clock, I take that back. Yeah. Right at 3 o'clock, price hit that level and it bounced off. It did the same thing at the 3:30 time bar out here. But price is not taking out that high. So as long as the high is not taken out, it's really kind of neutral right now, Tom, because it's between what I would call resistance, the high of that 8 bar, and then Stevie's green line. So this is really cool, folks, because if the high doesn't get taken out, whether it's before the cash close or the close at 5 o'clock this evening on the NQ, watch overnight, because if price starts trading below the green line level, which right now is about 30.53, we should see price pull back to 30.45, 30.41, or even 30.36. That's what I would be watching. So here, and so it was great watching the space shuttle, so to speak, or whatever they're referring it to. Yes. Having them talk about the tools, or just simply keeping that into its proper orbit so that it could dock properly. And those are really the same tools that I use each day when I'm calling the market, either for subscribers or during the radio show. Now, I put that chart away, and here, this happens to take a look at 6 of our major international markets. Okay. We've got the Dow in the left-hand panel, the NASDAQ right next to it, then we've got the Nikkei. Below that, you've got the Hang Seng, the DAX, and then the FTSE. And the idea is to try to get some perspective on the market. Where are we at? Well, if you take a look at the Dow, it's sitting really right at the 0.618 retracement. So not bad. The NASDAQ, as you pointed out, all the way back to its highs, likely headed to the 97.36-ish area, the top of that NDX 100. The Nikkei almost about a 0.786 retracement. When we take a look at the guys on the bottom level here, you've got the DAX, only a 0.618 retracement. So lagging the NASDAQ, basically the point of this set of charts here, it's just the NASDAQ, just like you and Dave were talking about, how we've got this paradigm shift where you've got online that's just simply totally demoralizing at this stage. Here, the brick and mortar business. Yes. If we take a look at some of these other markets, so we can see it's really just the technology area that is where the focus is. So let me get to the chase right here, because we've got about a minute left. So we took a look at those TD9 counts just on a 30-minute time frame. And folks, this works for every time frame. And if we look at this is something that that subscribers receive each morning. It allows them to understand the different patterns that are in play for the daily time frame, the weekly time frame, different levels of support. Now, these pink highlighted levels, if you look at D, TD9, these are the daily TD9 count patterns. And if there's a star next to it, it tells us that it's a valid count, meaning that it's bar 8, 9, or the bar following 9 that has made the high out here. And so just like we looked at for the 30-minute time frame, we took a look at 3 different time frames where the 9 count had identified a top or a bottom. We've got it here for the NASDAQ Composite, the Dow Jones Transports, the Russell 2000, the semiconductors, the S&P, and the Wilshire 5000. That's on the daily time frame.
It makes it pretty easy, pretty cool.
Yeah, if we slide over to the weekly, look, we've also got 8 counts on the NASDAQ Composite, the NDX 100, the Russell 2000, the Wilshire 5000 out here. So, folks, what I'm going to say to you is that June, even though it's maybe just summertime trading, this could be quite an interesting month, Tom. And this week or next week, we could see the high for the summer.
And folks, real easy to get his newsletter. You saw the graph that's going out there. I mean, that's about as easy as you get when you're looking at it as to where you are in the markets. Come over to our website at TFNN. You're going to go into featured content. You can get it for a month, 6 months, a year. All come with a 30-day money-back guarantee, folks. Steve, have a great one, safe one. Of course, we look forward to showing up tomorrow.
Thanks, Tom. Take care.
Thank you. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den